Hello, everyone, and welcome to Markets Overview Live. I am Sam Cheney, Commercial Director at M4 Markets. Right now, markets are reaching to one of the most significant geopolitical developments we've seen in many years. We're seeing rising tensions in the Middle East, which is making sharp moves in oil prices and increasing volatility across global markets. So in today's session, we're going to break down what is happening and, more importantly, what it means for traders. Let's get straight into it. Let's start with the main drivers in the market right now, the situation in the Middle East. In particular, the focus on the Strait of Hormuz. This is one of the most critical energy routes in the world, with roughly 20% of global oil supply passing through it. And as we can see here, there are growing concerns about the disruption to that supply. This is an extremely important matter because any disruption here doesn't just affect oil, it affects the global economy. There is no longer just a geopolitical story. This is now a global macro event. Now let's look at how markets are reacting, particularly oil. We're already seeing sharp moves in oil price, with markets pricing in potential supply disruptions. Some analysts are even suggesting that oil may move to $100 per barrel if tension continues. This is classic supply shock. When supply is at risk, prices don't move gradually. They reprice very quickly. High oil prices feed directly into inflation, which can complicate central banks' decision making. And it's not just oil prices. We're also seeing real disruption in global trade. And as you can see here, hundreds of ships are now anchored in the Gulf, unable to move safely through the region. This shows that the impact is already happening. It's not just expectations. Markets are not waiting, they're reacting in real time. What does that mean? This creates uncertainty in supply chains, which adds pressure across all commodities. Another important factor here is the escalation of conflict. We're seeing increased military activity and the situation is spreading across the region. And this is what keeps markets on the edge, the uncertainty about what happens next. Markets don't like uncertainty, and that's exactly what we have right now. In this kind of environment, we typically see a move into safe haven assets, particularly gold. As risk increases, investors look for protection, and that supports gold price. Gold is reacting to the uncertainty, not just technical levels. If tensions continue, gold could remain supported. Now, it's not just gold. We can also shift and look into currencies because this is where things get really interesting. We're currently seeing divergence between central banks. For example, inflation in the euro area has dropped significantly, increasing the likelihood of rate cuts. At the same time, other economies are facing real challenges. And when central banks move in different directions, that's where opportunity in the Forex markets are created. Markets are forward-looking, they're pricing in expectation, not just current conditions. So what does this mean for traders? First, geopolitical is currently driving the market. Second, oil is the key asset to watch. And third, central banks' expectation remains critical. In this kind of environment, volatility increases, and that creates both opportunity and risk. So the focus should always be on risk management. It's not about predicting the markets, it's about preparing for different scenarios. So the focus should always be on risk management. It's not about predicting the markets. Overall, it's about preparing for different scenarios. If you found this useful, make sure to follow us for more weekly market insight and let us know which markets you're watching. Thanks for watching and trade safe.